One of the best ways to get totally screwed on an insurance claim is to have the wrong kind of property valuation. On this video, we're going to take a look at property valuation methods and give you some quick hits information to make sure that you get the claim payout that you expect as quickly and easily as possible. We'll get into that right after this. Well, hi folks, I am James Jenkins, Chief Risk Officer of RiskWell, and for those of you that are binge watching this entire playlist for our Real Estate Investor Insurance Academy, there's a whole series of these videos, of course. You will probably notice there's a little change, and yes, I did get a fresh cut. I'm recording this during the COVID-19 crisis of 2020, when for a brief time in our nation's history, it is socially acceptable to give yourself a haircut. Don't think I did too bad if I do say so myself, so there's your trivia for today. On this video, we're going to take a look at 3 valuation methods for property insurance and give you what you need to know to make sure that you don't get totally screwed in a claim situation. So let's go ahead and jump into the screen share and get started. If you want these slides, be happy to share them with you. Just drop me an email or comment on this video and we can get those over to you. So, property valuation methods. Let's jump right in. There are basically 3 methods of valuation. We're going to get into each of them just a little bit here on the video. First is actual cash value, otherwise known as ACV. Second is replacement cost value, commonly referred to as RCV. And the third is a pretty new development in the last few years in the insurance world called functional replacement value. We're going to get into all 3 of those in a little bit more detail momentarily. One last thing to note, there is agreed value where you and your insurance company decide ahead of time what the agreed value of the property is going to be. That really doesn't happen anymore, but in case you happen to see that on a policy, that's what it is. First, we're going to look at actual cash value, which determines the replacement value of the property and then assigns a value to depreciation based on the expected lifespan of the property. Simply put, ACV is going to penalize you for an older property more so than it would for a newer one. One thing to keep in mind, especially regarding the roof, if you have a roof that's older than 15 years, most insurance companies nowadays will penalize you by requiring ACV for the roof, which will mean the difference of several $1,000s in roof payout if your roof is older than 15 years, of course. That makes perfect sense. Next is going to be replacement cost value, or RCV, and basically what this does is simply determine the fair market replacement value of the structure using its current kind and quality. The big difference is there is no penalty for depreciation, so you get full replacement value of the property as well as the roof if the roof is less than 15 years old. This is almost always the best option. I can't think of any situation where ACV would be better than RCV. You're going to pay a little bit extra for it on your insurance policy, but you really need to make sure that it is available if you're choosing the carrier. If you're working with an agent or broker, make sure that you ask the question, is it ACV or RCV, or just look for it on the proposal that they send you. Lastly, we're going to take a look at functional replacement value. This is a new development, and it's basically determining the function of the damaged portions of the structure, getting it back to the same function, but not necessarily the same quality grade or cosmetic quality as before. The example that I like to use is the countertop in the kitchen. Let's say you had a nice marble countertop and you had FRV, functional replacement value, on your policy. Then you could very easily end up with an engineered or linoleum or some kind of much less expensive option for your countertop, because functionally it's the same as your Carrara marble, but obviously it's not nearly as nice or as pretty. So the value is going to be significantly different here. You can think of this as the halfway point between ACV and RCV. And there you have it, folks. Any questions about valuation methods, you can drop me a line, riskwell.com/consultation, or you can call our office, 469-678-8001, or email us, info@riskwell.com. That is all for our video here. I would ask, if you find value in the content you get in this video series, please consider subscribing to our channel, like the video, and ring that bell for notifications. That's all, and we will look forward to seeing you next time. Please remember, boys and girls, life is risky. Risk well.